Forensic accounting is the use of accounting skills to investigate fraud or embezzlement and to analyze financial information for use in legal proceedings. There are two categories for forensic accounting. The first one is litigation support, and the second one is investigative accounting. Litigation support is the provision of assistance nature in involving existing or pending litigation. It focuses on economic damage, valuations, tracing assets, revenue recovery, accounting reconstruction, and financial analysis. They work with lawyers involving contract disputes, insurance claims, royalty audits, shareholders' disputes, and intellectual property claims. Investigative accounting is usually concerned with investigations of criminal nature, sometimes involving employee fraud, insurance fraud, kickback, and advance fee frauds. Moving on to the role of a forensic accountant. First of all, they possess specialized investigative, auditing, and accounting skills to analyze an organization's financial statements while also investigating for fraud. Forensic accountants are also known as forensic investigative auditors or forensic auditors. These types of accountants can be engaged in public practice or be employed by insurance companies, banks, police forces, government agencies, and other organizations. They also develop computerized applications to assist in the analysis and presentation of financial evidence. Moreover, forensic accountants communicate their findings of the financial position of a company or an organization through reports, exhibits, and collections of other documents. They also assist in legal proceedings, including testifying in court as an expert witness and prepare visual aids to support trial evidence. They review the situation and provide suggestions on alternative courses of action. They also assist in preservation, protection, and recovery of assets, and are always on the alert for forged documents and transactions that may hide potential frauds or lead to more incriminating evidence. Forensic accountants assist in the tracing and recovery of assets through civil, criminal, and other administrative proceedings. They focus on the who, the what, the when, the where, and the how of the situation. They need to go through all the steps to understand and decide what needs to be done. Because of this, they interview key company employees, formally and informally, and consider all suspects so nobody is ruled out or beyond suspicion. Forensic investigative auditors conduct extensive searches of a company, its documents, and computer files for further evidence. One benefit of a forensic accountant is that they have accounting expertise and industry knowledge. They would add on to an organization's investigation team with a depth of experience and deep industry expertise in handling frauds of an organization. Another benefit of a forensic accountant is that they have objectivity and credibility. They do their job perfectly, and once they find any kind of evidence, they report to management. Forensic accountants and its team are credible from their reputation and experience. Moreover, they have provision of valuable resources. They provide the much-needed experienced resources and can offer immediate changes and suggestions. This becomes more critical when the nature of the fraud calls for the management to move quickly to contain the problem, and forensic accountants are able to provide that. They bring enhanced effectiveness and efficiency by focusing on the issues at hand, root out the fraud, and recognize transactions that are normally passed over by the organization's accountants or auditors. The first company scandal is the Volkswagen emissions scandal in 2015. This company installed the software in millions of cars in order to trick the Environmental Protection Agency's emission testers into thinking that the cars were more environmentally friendly than they actually were. They roughly lost $20 billion in market capitalization as investors worried about the cost of compensating customers for selling them cars that weren't compliant with environmental regulations. The company also had to deal with potential fines from regulators as well as a reputational hit that severely affected their market share. The second company scandal is Toshiba accounting scandal, which happened in 2015. It was when Toshiba admitted that it had overstated its earnings by nearly $2 billion over 7 years, more than 4 times its initial estimate. CEO and president then resigned from the firm, and investigators and forensic accountants later found out that the management decisions in Toshiba could not be challenged. Employees were being pressured into inappropriate accounting by postponing loss reports or moving costs into the later years. The Tyco scandal happened quite a while ago in 2002, yet it is still remembered today. This is when the CEO and CFO stole $150 million from the company and inflated the company income by $500 million. They siphoned money through unapproved loans and fraudulent stock sales. Money was then smuggled out of the company disguised as executive bonuses and/or benefits. Later, a class action lawsuit forced Tyco to pay $2.92 billion to investors. A few common forensic accounting fraud areas include revenue recognition, inventory, and expenses, which are basically delayed expense recognition, overvaluation, bad faith estimates, premature recognition of sales, improperly valued transactions, or improper capitalization of expenses.
Did you know that some famous movies highlight forensic accountants? Some examples include The Bank, Catch Me If You Can, Enron, The Smartest Guys in the Room, Maxed Out, and Wolf of Wall Street.
Thanks for watching!